Hello, everybody. Welcome back to Investing with Jimmy. We got a lot to talk about today in today's episode. So let's go ahead and get right into it. I want to welcome everybody to the new channel. Thank you so much for joining me today. What I want to do is I want to kind of break this down for you guys on what's going on with the market. And we're also going to talk about Google. You guys know I have a lot of Google. And my stop loss actually was activated at $165. So we actually did really well with the trade. I was just disappointed that that happened to Google today, and I'll get into Google here in a little bit, but we are okay. Our shares did sell. We did free up a large amount of money that is available to go to another some swing trades and things that we want to do. So financially, we're perfectly fine. And I'll get into how important it is to have a stop loss, especially uh, every time that you buy something. You need to be very smart about stop losses. Now, usually I don't set the stop losses very um, so let's say I buy something for $160. I don't set the stop loss at 159. I want to go a little lower than that because I don't want it to just stop, and fluctuate a dollar, and I lose my money. So I don't want to do that. So I'll get into that in a minute. All right, let's go ahead and start with the trade desk. You're looking at the trade desk. I haven't explained anything about you on that. This is the first time I've ever talked to you about the trade desk. I do have some interest in this stock, and I'm going to share with you why. And let's take a quick look, okay? So if I look at a 5-year chart, okay, in 5 years, this company made 75%. But in the last year, it's given a large percent of that money back in the last year. So look at the decline that happened recently. You had a straight drop, just freaking went right down the cliff. You guys all see that? So you had a stock that if you look at the price right now on a 5-year, you're pretty down low, which is pretty attractive, okay? Now, it doesn't always mean it's attractive. Just because you see a stock at a 5-year low, it's not always great news. It's an opportunity, but you have to do a lot more research than just looking at something that's at a 5-year low. Okay. All right. So we're going to look at a 1 year on this thing. If we look at a 1 year, now out of the 75% that it made over the last 5 years, it was higher because it's lost almost 31% just in the last 12 months. Okay. So you're talking about a stock, guys, that used to be $100, $143 high in the last 12 months. Think about that. This thing is really, really, really dipped. All right. Now, so that's attractive, but we have to look a little deeper. So when we look a little deeper, so we're going to scroll down here, and I'm just using Yahoo, guys. You can do this on your own anytime you want. So what you're going to do is you want to look at the financial highlights, okay? Now, take a look at this, all right? Now, this is not bad. It's not great, but this is actually really good. I'm sorry. This is why I'm interested in this company. This is actually great. The total cash is 1.92 billion. The total debt is 10.5%. Okay, so 10.5% is the total debt. That is nothing, like literally nothing, guys. Okay, so the leverage is, so how much cash flow that they have is 613 million. Okay, plenty of money. Now, here's what I don't like. This is what I don't like. Even though that stock has dropped so severe, look at the forward PE. The forward PE is 50. That is still trading high. That's still trading high. Okay? So it's overvalued. this stock is overvalued, even though it has dipped that much. Okay. Even though it's dipped that much, it's still technically overvalued. Do I see it kind of going much lower or anything like that? It's really hard to say, guys. I'm not a psychic. That kind of stuff is, nobody knows. If anybody tells you, unless there was some type of serious news that I knew about, it's kind of like Kramer knowing that Apple was going to pull the plug on Google. That's inside information. That's why he was saying for the last couple weeks that he did not like Google. So he has inside information. So a lot of the very wealthy people that are connected to these companies, they get inside information, but they keep it on the hush hush. But it's still technically illegal. All right. So anyway, the trade desk, I've got my eye on it. I've got my eye on this stock. It very, very well could have a lot of percentage that it gets back. So it's hard to say, but I wouldn't mind taking a risk with this particular stock. It's very capable of getting back to the $75, $80 range. Okay. All right. So let's move on. We'll go ahead and remove the trade desk from our tutorial. All right. Robinhood. I like this stock, guys. I like this stock. Now, I don't necessarily like it like a ton at this particular price, but because you got to understand, guys, I like to buy always with the philosophy of a swing trade. I like to swing trade. Okay, there's so much vulnerability in the stock market. Now, there are certain stocks, like this stock, for example. This is a type of stock that you want to hold. This has a very, very high potential with this particular stock. Okay. Now, the evaluations on it, let's get into it. All right. So it's up 14 cents today, which is nothing. Okay. Now, if you look at a 5-year, all right, we're way up at the top on the 5-year. All right. If you look at a 1-year chart, the 1-year, you're talking 171% that this stock has already earned in the last 12 months. 171%. That is a lot of money that you would have made. Okay? The 5-year earned 28%. The 1-year, 171, almost 172. Now we're kind of up here. We're kind of up here on the radar. All right? It's a little concerning. You're kind of in the middle of no man's land, is what we call that. That means that there's a lot of room for dropping. I mean, look, you could technically, look at the 5-year. Could you imagine if this thing goes down to the center? You're talking half of your money gone, and you'd have to hold it for a long time for that to come back. Okay? You always have to think like that when you're about to buy something. Okay? Now, let's take a look at the evaluation of this stock. And then we're going to have a better understanding of what this stock has to offer. Okay. Now, the total cash is $13 billion. The total debt is like 118%. Okay. It does not give us the cash flow. The trailing the trailing PE is 27 and the forward is 32. All right. So I think it's a little too high right now. Based on evaluation and everything, I think it's a little too high. I like this stock, but remember, I'm looking for swing trades. I'm looking to get in and get out. Now, if I wanted to hold this long term, I would be perfectly fine. I really wouldn't care about getting it for the lowest possible price right now. If I'm looking for long term, I would love to get this stock at like $39. We'll have to wait and see. $40 maybe. We'll have to wait and see. But I do like the stock. Okay, next stock. Let's get into Arista. All right, ANET is the name of this symbol. Now, guys, I've been waiting for this stock to dip, and it's dipped. It was down like yeah, it's about 6.5% that is down. I was hoping to get this stock and get into the stock around the $84 range. Okay, that's what I was looking for. And now, guess what? The opportunity is now. Now, I don't know if I'm in such a huge rush today because usually, not always, but usually, when a stock dips like this, it usually dips in consecutive days. So, for example, it could give back like a percent today. In other words, it could go up a percent more, and then tomorrow it could dip at 1.5%. So it's really hard to say, but I think if I can get this around the $83 range, I'd feel even better. Because, like I said, I'm really trying to get it, because if you look at the 5 year, it's 546% that this stock went up. 546. Guys, you would have 5x'd your money. If you had 100,000, you have a 500,000 over the last 5 years. Okay, in the last year, only 24%. So if you look at that chart on the 1 year, it's getting attractive. It's getting attractive, but that's only based on the 1 year. If you look at the 5 year, we're way up there, guys. We're way up there. All right. So now let's take a look at some of these numbers. And boy, are you guys going to like this one. Look at this. Total cash, $8.3 billion. Guys, zero debt. Zero debt. Not even 1%. Total cash available, $2.82 billion. This is the only thing I don't like. 36% forward PE ratio. I would love to see that around 25, maybe 28%. 35, 36%, it's high. All right. It's not crazy high like Palantir, which is ridiculous. The forward PE on this, it's high, but guys, come on, look at this. How do you not invest in a company that has almost $3 billion with zero debt, and they're bringing in tons of cash? Okay, tons of cash. Their profit margin, guys, is 40%. 40%. Holy schmoly, holy, popoli, foley, sholy moly, holy poly. Wow. Guys, I might have to just go ahead and buy this one. Screw the $83. They just got too much money with too good of. The books are too good, guys. The books are too good. That says it all right there. All right. The next one, The Honest Company. Now, I'm going to tell you what I have in mind with this particular company. What I have for this particular company is a swing trade machine. I repeat, a swing trade machine. Machine. Now, what do I mean by that? Okay, let's take a look at what this stock did today. All right. So these are short sales. These are swing trades. You buy it as low as you can, and you sell it as soon as it goes up. You make your profit. You get the hell out. Could you hold this type of stock? Yes. Could you double your money with this stock? Yes. So you need to go ahead and make sure that if you do get down, you don't sell it, because this stock does have the ability to go up and double. Okay? So let's take a quick look at a 5 year. And as you can see, over the 5 years, this stock used to be $18 and it just crashed. It went through the whole coronavirus situation. And guess what else that this company is dealing with? They have their manufacturing in Mexico, and they have their manufacturing where? China. You guessed it. But guess what's happening, guys? Talks with the Chinese. Talks with the Chinese are starting to happen. I like this stock. Okay, I like this stock. Now, this stock today, let's go back to, let's take a quick look at the earnings on this thing. Okay, they've got total cash $75 million. This is a much smaller company, guys. This is owned by that famous actress, a real pretty Latina girl, Jessica Abba or Abba or something like that. But anyway, total cash 75 million, very small amount of money. Total debt, guys, 12%, 12.5%. Come on, cash flow 9.7 million. Not the greatest amount of cash flow, to be quite honest with you. They're very, very, very small. This is probably completely funded by Jessica. This is just her personal movie star money. So that's like chump change for a company, guys. That's not a lot of money. All right, total debt 12%. Gotta like that. That's a big plus right here, guys. It doesn't look at the 4 PE 25%. Okay, I would like to see this one around the 18%, but can't always have the perfect situation. So this stock right here, we'll go over to why I like it as a day trader or a swing trader, okay? All right, this stock, look at the movement. Today, had a crazy rush and then it collapsed. Started off in the morning super early. I saw this thing fly right up to $5.14. Don't make me bust out a calculator, okay? Let me explain something to you guys. I'll share this real quick with you. I'm busting out my calculator. All right. Let's say, for example, on my calculator, let's say that we just bought $30,000 worth, okay? And we divide that by $4.75. Let's say we paid $4.75. We would have 6,315 shares. If we made and sold that at 5.13, okay? $5.13. Guys, you're talking about 20 cents, 25, we'll say 22 cents. Okay, you would make $1,389 that you would have made in the morning, and you would have been gone. And then look, boom, it came all the way back down, and now you look for your target price again. Now, I originally told you guys my target price for this was $4.40. I'm going to bring that up to more of like the 470 now. The reason why I want to go with 470 is you're going to have China coming into the picture. And when that happens, they've got their manufacturing going again with China. Now, I don't know. Maybe they still do. Maybe they're, I really don't know. They probably have an arrangement where their products done in China, pushed over to South Korea or pushed over to Vietnam, and then they're funneling it over through there, or it's being shipped to Mexico and they're paying those fees over there. I really don't know. I'm sure there's some kind of creativity that this company is doing. All right. Now, in the future, yes, the tariffs are going to affect their business, but it's just going to go up a little bit on the pricing. Whatever they have to pay is going to be added to the pricing. That's why, all this tariff stuff that it's going to make us a rich company. No, it's going to make the government rich, not the people, the government. Okay, because the people are going to be paying more money for products, period. Okay, they're going to be paying more money for products, so you can't expect, the American people are really paying for these tariffs. The Chinese people are paying for it. American people are paying for it. Price of products have to go up, and that costs us more money. All right. Now, if the government ends up reducing our property taxes, if they remove property taxes, if they remove, income taxes, things like that, then hey, that's fine. I like the plan. Other than that, I don't like it. All right. I do like it and do understand it regarding China. I do get it. They're making the trade fair for the world to compete with China. All right. So that way you don't have one country controlling all the trade and becoming gazillionaires and then building military that they always can threaten us. We don't like that crap. Why would we want to get why would we want to get a country rich that hates us? Okay? Chinese people or their government, not the people in general, their government does not a big, they're not an ally of ours. Okay, if they were an ally like India, then that's why we want to have maybe India start doing this stuff for us. All right, so everybody see the opportunity with this one. That's what I'm looking for. All right, let's get away from this stock. Oh, Mr. Google. Mr. Google got punched in the gut today. Got punched. My shares sold at 165. Had a stop loss. Went to the store, had no clue, came back, saw I had all this money in my account, and I was like, what the hell is going on? And I look over at Google, and it's sold. And I'm like, what the hell? Well, here's what happened with Google. Google McDougal fell off a cliff today. And what happened was you had Apple going public by saying, hey, we're going to be launching our AI search for Safari. So Apple, man, you're talking about all these iPhones and their platform Safari. So think about how many people are going to be using Apple search that have Apple products instead of having Google. So it's going to take a lot of the search income away from Google. It's going to do that. So what do I think at the 152 price right now? All right, well, here's what I think. A lot of times you can make a good amount of money on an amazing company like Google that takes this type of hit. So here's what we want to do. We want to allow and absorb the hit. So now, like, I got out because I was protected. I got out at the 165. I got it. Look where I was, how I did it. Okay, so the stock was at 166. So what happened was I always adjust my stop losses based on what my profit is. Okay, so once I'm already up on the stock, or even if I'm not up on the stock, I always have a stop loss. So I'll set my stop loss, and then in emergency situations like this, boom, it goes into play. Now, the good news is because I was already in profit with 176 shares, where I made a decent amount of money. So it automatically sold it. I was able to keep my profits, and now I have an opportunity to buy it lower, but I also have to keep in mind that the company is definitely going to make less money. There is no ifs or buts about it. They are not going to be able to make that money that they're used to making with the Apple products. That's a huge, huge hit to Google, period. It doesn't mean that Google's going to fold up and collapse. Please, please, okay? Can I remind everybody about this company's income and financial situation? Hello, people. $95 billion, 8% debt, 60 billion available. The forward PE ratio, 17%. That's the best one we've seen. Okay. Amazing books, amazing company. All right. I'm not worried about Google collapsing or anything like that, but I'm not going to lie. That's a hit. That's a punch in the gut. So let me get some water. Hold on. Sorry about the swallowing, guys. My throat was real itchy there. Okay. I have that microphone right next to my throat, so I'm so sorry about the gulping. All right, so here's the deal. I want it cheaper. I want it cheaper. Okay? I think it's too vulnerable at this price. I think it's too vulnerable. It could go to 144 because if it breaks the chart line, let's take a look at a month here, okay? Okay, so this is actually last month. It went to 146. So at that 146 level, if it breaks that resistant line, this sucker could go all the way down to like 139. That's if it breaks that line, okay? We don't know. Now, look where Google was just last month. Just last month. And that was without this news. Okay. So, like I said, I'm a little wary right now of Google. I'm not going to just rush in at this price. Okay. The reason why you see it at the 152 is there's a lot of people out there that did not sell. Okay. My shares were sold. They were automatically sold because of the stop loss. So, well, and it's not a loss. So I should call it a stop saver. Okay. It saved my profit and it prevented me from, going in negative. So where do I want this stock? I'm going to try to see if it can go to one round down here, man. I would love to see if this sucker can go down to like the 147 range. But here's the problem. When you get down to that 147 range, you've got to be careful around that resistant line, because if it breaks that resistance, you're going to a new low, and it can happen. It can happen. So what I'm going to do is I'm not going to rush into this. I'm just going to see what happens. But I will say, sometimes when you see a stock get beat up like this, it's an easy 7%, which is about $13 a share going up. If because what happens is that you get all of those people who sold. You get the people like me, the people who sold, made their money. Stock crashes, you rebuy it, and if you have a whole bunch of people doing that, it pushes the stock back up. It pushes it back up. So we're going to keep our eye on this. If we miss out on it, we miss out on it. All right. Now, I do have one last stock that I would like to share with you guys. Like I said, a lot of stocks that we're covering today. I have other stocks here, but I don't want to cover those. We'll cover Schwab. Okay. All right. Now this is an ETF, and I'm going to share with you why I really like this stock. All right. I like this stock because it's very safe. It's a very safe stock. So let's look at a month. Okay. So look at the way that this thing goes over periods of time. So we'll look at the 1 month, we'll look at the 6 month, we'll look at the 1 year, we'll look at the 5 year. All right. So what happens on a 1 month? We're way up at the top. Way up at the top. My price range for this thing is 22 to 24. I like to get in at between 22 and 24. All right. Now, if you buy this stock and you just forget about it, I'm totally cool with that. I think that in the future, this thing's going to trade way higher than what it's trading for. All right. Now, if I look at a 5 year, okay. So, let's finish the 1 month. Okay. 1 month, which was that April 8th day was a nightmare day, wasn't it? That sucker went all the way down to $22, and then boom, there was our chance, because our target is between 22 and 24. Now, this stock does not move a lot, which is why I label it as a safe type of stock. Okay. So if I look at a 6 month, okay, on a 6 month, we're coming down the notch a little bit. We had the highs of like 28 bucks, somewhere around there. All right. Now it did lose 7% over the last 6 months. Over the last month, it's up 13%. All right. Now let's look at a 1 year. In the 1 year, it's up 10% going on 11%. We're a little high. I like to see this at like 23 range. I feel really comfortable as a swing trader where I'm around the $23 range. I would probably even settle at $23.50. All right. So on a 5 year, 122%. We're way up there, guys. Okay. So let's take a quick look at this particular stock here. Now, this is basically a holdings of these type of companies here. So you have a lot of good companies here, guys. You got Apple, you got Microsoft, you got Nvidia, you got Amazon, Meta. I mean, you have a whole bunch of companies. You got Tesla's in there, Google. So yeah, that's probably why it's starting to go down today a little bit. But it's overall, it's a good way to play the game. Okay, let's just take a quick look here. Yeah, bear with me. Okay. All right. So anyway, this is an ETF. I forgot. All right. So this particular stock, I like to keep an eye on it. This would be a type of stock that I want to buy and flip. If I do hold it, I would be okay with that. But it moves like a snail. It's a snail. It's a snail. Okay. Now this is one day. It was at 25.83 up at the top, and it got as low as 25.56. So guys, you're only talking like 30 cents. It moves like a snail. Okay. Here, 5-day chart hit 26.20 and it's at 25.68. So you're talking, in 5 days like 40 cents. A 1 month, okay? And over a course of a month, now you had that one particular day that was doomsday. So let's go off of this mark, because that was just this one particular day that just dropped on April 8th. Everything just collapsed on April 8th. All right, so let's go off of a realistic kind of figure, which is here, 2302, and now it's at 25.69. So think about that. That's a $3 gain, a $3 gain that you would have on this stock over a 30-day period of time. It's not the greatest in the world, guys, but it's a safer play for a lot of you guys that just want to be in the market and play this particular game. Okay? All right, so I figured I'd show you guys that one. All right? Thank you guys for watching. Give me a like for the video if you would like to. I would appreciate that. It helps the channel out. Subscribe to this new channel. I really appreciate you guys doing that for me. A lot of you guys come over from Gamble with Jimmy. So thank you for joining me, and thank you for supporting it. And I'll see you guys on the next video. Thank you so much. You guys have a wonderful day. And don't work too hard. Take care. Good luck with your trades.